Hello, California, and welcome to this week's edition of Your Financial Compass, the show dedicated to helping you successfully navigate to and through your retirement. I'm your host, Kristen Oakley, and I'm joined by two financial advisors from Bulman Wealth Group. We have Scott Bulman and Swan. We're so glad you're joining us today. We have a very important conversation for you. The title of today's episode is Prepared, Not Panicked: How to Navigate Market Uncertainty with Your Investments. Scott and Swan, so excited to have this conversation with you as I am each and every week. How are you doing?
Panicked.
I'm panicked.
But you're prepared.
I didn't even know the show topic until you just said it, so I'm panicked. I don't know what to say.
No, you guys put a lot of thought into these conversations each and every week, and I know that really this is birthed out of conversations you're having in your office, right? That's why we want to have conversations on the show that we know are on the top of folks' minds, and being prepared to navigate the unexpected is a key one right now.
Oh, yeah. I mean, Sean's been in this business 47 years, so he's seen his share.
Expect the unexpected. That's fine.
No, for sure. That's a theme for life, right?
Yeah.
But let's first talk about this whole concept of a black swan event. That's a term that gets used in our industry. I think it's important for our viewers to understand what that is and why it matters. So who wants to take that whole definition? Go for it.
So Black Swan was a 2010 film starring Natalie Portman. She's a very skilled actress. But other than that, there was a book in 2007. The author kind of brought it up in the context of back in the 1600s. Europeans used to say all swans were white.
That's what they believed because that's all they had seen,
Correct.
right?
It's all they had seen. So if it's all they've seen, it's got to be the truth. Absolutely. Well, in Australia, of all places, they discovered a black swan to prove, well, it's not common, but it's happened. So then this phrase black swan came about, and really what it means, it's just because something has never happened before doesn't mean that it can't.
Right.
And there's a few qualities, obviously one is a black swan event is rare and unpredictable. It can be very extreme in impact and very quick in impact, something that we might not have seen. And it's one of those things that in hindsight, we kind of rationalize it. Oh, we should have seen that. Or how did we miss this? I always say it's like watching a movie for the second time. Like, oh, there it is, or there's the killer's right there. How did we miss it?
Right.
And obviously it's easier in hindsight, but it's just ultimately the main crux of it is something we didn't anticipate, and it has a dramatic effect.
So some recent examples in the last 25-ish years would include what?
Well, there's been a number, and when we talk to our clients, or we do a lot of workshops as well, and we talk about the three main concerns of retirees. Number one's running out of money.
Right.
Number two is inflation and taxes. How do you protect yourself against that? Number three is changes in the market, dramatic, unexpected changes in the market, because the corollary is people feel, I can't afford to lose money in retirement.
Right.
So these black swan events, these unexpected major events in the market can cause a lot of anxiety and fear among investors. And we don't have to go back very far. I'll just kind of go back to 2008, 2009, the financial crisis.
Right. Yeah.
Or certainly even before that, 9/11, or the tech bubble. And then we've had the COVID crisis in 2020. Now, in 2020, the market dropped 35%. 2008, 2009, we saw a 50% drop in the market. Most recently, we've got the tariffs, and this is something we definitely could say, well, we saw it coming. It happened. It had a 20% drop in the market, recovered very quickly. But just examples of even things that we think are out there, sometimes we don't quite understand or anticipate the dramatic drop it can have in the market.
Right, and it's things that we can't control. I think that's the other hard part, right? So even if you can anticipate some of this stuff, I mean, those things you just mentioned, a lot of them came out of the blue, unexpected, people weren't prepared for it. Why are black swan events so dangerous beyond just the potential losses that can occur?
I think it triggers the emotional aspect of it. We've said this on prior shows of generally when the emotions get involved in investing, it comes back to haunt us because many times we might be, it could be a catalyst to making a poor decision, trading out. Hey, I'm going to trade out. I'm going to it's looking bad, I'm going to move into cash position, but then I'll get back in at the right time. You're never going to time it right, but we make generally poor decisions when it's impulsive and emotional. And it also forces us to kind of abandon a plan. So if we're saving, say our plan is to just save in our 401k and we're still working, and that's the plan, and then we see the market tumbling. Oh, I'm going to back off for a little bit. I'm going to wait till it's done. The great poet Mike Tyson once said, we all have a plan until we're punched in the face. The black swan event is like that punch in the face. So it causes us to do things that we probably wouldn't do under normal circumstances. And generally those, like we said, tend to be bad decisions.
Right, yeah. Well, and the point is you can't predict them, but you can be prepared, and that's what this whole conversation, I know we're going to be sharing more strategies to help folks be prepared for the unexpected. It's not about avoiding the black swans. We know they're going to happen. We don't know when. It's how to survive them successfully. So what encouragement, as we wrap up this segment, do you have for our viewers regarding navigating black swan events?
Well, I think you said you can't predict them, but you can prepare for them. And the biggest danger, which we'll talk about too, and Scott alluded to it, is
Mike Tyson.
Yeah, Mike Tyson. But during those events, the panic sets in. We tend to sell, get out of the market. It's easy to know when to get out, but it's very difficult to know when to get back in. Bloomberg did a study going back to 1960. They looked at the top 15 worst days in the market. So the average was around 8%. Now, for the market to go down 8% in one day, that's pretty significant. 1 year later, on average, the market was up 30%. So that there's a real cost to not being prepared for these events that we just know are going to happen.
Right.
And I know we'll talk more about how to actually prepare for those events.
For sure, but as you were talking, Sean, it kind of reminded me, one of my mentors always said, it's not about trying to time the market or timing the market, it's time in the market. And the problem is if you're jumping out and jumping back in, to your point, you have to be right twice.
Right.
Nobody has a crystal ball. Nobody can effectively do that. And often the best market performing days are immediately on the heels of some of the worst performing days, right?
Yeah, that's I find fascinating. And there's a study kind of referencing what Sean was doing. JP Morgan did a study that over a 20-year span, if you missed the 10 best days, you went from almost 6% return down to 2%. So it's just like, here's the takeaway: you're not going to time the market. So don't try; it's not worth it. A dead clock's right twice a day, so every blue moon it'll happen. But it's really, what's the saying? And we're going to throw out all these lines. History doesn't rhyme, but it doesn't repeat, but it rhymes.
Yeah.
So we've seen black swan events, as Sean said. The market, believe it or not, as crazy as it seems, we're in the midst of it, and as panic-inducing and scary as it seems, up to this point, it's always come back. And we forget that in the moment because it's like, we've never seen this before, and sometimes we haven't. That's the black swan. But the market is very strong, and it always comes back. And so the first thing is, you're not the only one that's emotional about it or scared about it or concerned, and that's okay. We don't want to panic. And if this is you and this has been you, or you're thinking about moving all your money into cash now, you can call the number below. We can set up what we call a complimentary financial compass review and have a discussion. What does it mean for you? Maybe you're 6 months from retirement and investment drops hurt you even more, or you're scary even more, but it all starts with a conversation. We'd be happy to chat and see if we can offer some guidance, especially in moments like this.
Yeah, for sure. Well, Scott, Sean, thank you. I know we have a lot more to get to in terms of strategies for people to protect and prepare themselves, but if this is resonating with you, or if you're already working with another financial advisor and maybe you're sick and tired of hearing them just say, you'll be fine, you'll be fine. If you want to know with confidence that you are prepared and protected from any potential unexpected market events, we encourage you to reach out to the team of Bulman Wealth Group. They are here to help and serve you. It starts by you scheduling your time to receive your very own complimentary financial compass review. 888-970-4685 is that number to call to schedule yours, or if you'd rather connect online, you can simply scan that QR code in the bottom right-hand corner of your screen, and that will get you connected as well. When we come back, we're going to be diving into some strategies to protect your portfolio. Stay with us to hear what Scott and Sean have to say about that right after this.
After college, I spent 8 years active duty as an Army officer, as a captain in the Army. And I was really driven by this idea of service and serving something bigger than myself. And when I got out of the military, it was an easy transition to financial services as a financial advisor. There was a firm that was looking for military officers who had just gotten out. They had done a study, and the people that served in the military tended to do well in financial services. And once I got into it, I just really fell in love with not only working with clients, but building portfolios, the strategic part. Just like in the military, in a military operation, you're here today and later you want to get to this destination. How are you going to get there safely? Planning all the logistics, the danger areas, planning around those. They just related to each other in a way that just made sense for me. And this feeling of serving clients, serving others that's bigger than myself became kind of my calling, just as serving in the military was my calling.
Did you know your retirement isn't entirely yours? That's right. Your traditional 401k, IRA, or pension is actually shared with the IRS. And when it's time to withdraw, they'll be waiting for their cut in taxes. To find out how much you might owe, try our easy-to-use tax calculator. Just scan the QR code or visit bulmantaxbill.com.
Welcome back. You're watching Your Financial Compass, brought to you by the team of Bulman Wealth Group. I'm your host, Kristen Oakley, here with financial advisors Scott and Sean. We are talking today about how to prepare and protect yourself against unexpected events in the stock market with your investments. We know that this is a huge fear, that especially for those of you closing in on retirement, or maybe you're newly retired, it's scary when you see the market doing crazy loop-de-loops, if you will, right? And not knowing how to protect what you've worked so hard to save. That's what we want to help folks understand, what they need to do about that. So let's talk about some principles for protecting your portfolio. How do you help do that with your clients?
Well, I could throw out a bunch of boring jargon, but I'll spare you. So think of it like this. Say you're hosting Thanksgiving meal, you got a bunch of family coming over, and if you just rolled out, here's the cranberry sauce, and that's it. Everyone be like, what in the world are they doing? Or here's the turkey. People are like, okay, what's left? You go prepared. You have corn, you have mashed potatoes, you have sweet potatoes, you have rolls, stuffing.
Don't forget the stuffing.
All these different things. You go out with a quote-unquote diversified palette of foods to eat to make it a better experience. And if the turkey's too dry, like Christmas Vacation, you know, the National Lampoon,
right?
Well, then you have the other food to fill in the gaps. So what the heck does that mean? You need to have your money spread out in various places within the stock market. Some more aggressive, some less, some in this sector, some in this sector, some in this sector. So it's not all reliant in one area. And generally, not all the areas are going to be sagging at the same time. So if one is zigging, or as you would say, loop-de-loop, if one's zigging, one's zagging, well, we don't want them all zigging or all zagging. It's about spreading it out to get a more even distribution, so it can kind of withstand a shock like that. So that's one of the best ways, is we enter that way and we're a little bit more prepared for it.
Yes, and really diversification. I think the other thing to highlight, we've talked about this on previous shows, being diversified properly doesn't just mean that you have multiple accounts or multiple mutual funds. A lot of people think they're diversified, but when you peel back the curtain on folks who come in who that's how their money is structured, what do you actually discover? That they're not properly diversified across asset classes, right?
Right. They're taking much more risk than they even realize. One, Scott made me very hungry talking about Thanksgiving dinner.
I am very hungry, so wrap it up, guys.
But two, you know, we talked on previous shows this idea of the 3-bucket strategy, the safety, income, and growth. And if done properly, built on a solid financial plan, our clients don't have all their money in the market. They have the right amount of money in the market that can grow long-term, hedge against inflation and taxes. But if they've got that income bucket full of 7 years of income, whatever happens in the market, they don't need to worry, because we know historically the average bear market or even a recession lasts a little over a year. So when they've got that income bucket satisfied, and they don't have all their money in the growth bucket, they can ride out these black swan events and with a lot less anxiety, stress, and concern.
For sure. How important does having cash reserves play into this preparedness as well? And if so, what's the right amount? You know, you hear different rules of thumb of how much money you should have on hand in case of emergency. How do you all navigate that with your clients?
It's a good question, and I think it depends on who you ask. And I know sometimes, especially for people that like to invest, having a bunch in cash can be boring. Normally, the rule of thumb when we're talking with someone is try to have 6 to 12 months of expenses in cash. So what this allows is if the market's going down, we don't panic sell. And we don't panic sell because we're low on cash and we panic sell and end up pulling from an investment that's already dropping.
And locking in the loss.
And locking, that's when we lock in the loss. It's a real loss then. And I always call it, we need that oh crap account, like the tires went out, or there's my daughter got a speeding ticket. She's only 11, thankfully. She hasn't been
You want to
yet.
hear about my 2025 so far with that, real quick?
I don't, but you can tell me after the show because I'm hungry, as we've already established.
No,
I need to wrap the show up.
I was saying our oven went out, our fridge went out, and we ended up needing a new washer and dryer. Bam, 2025 was a year.
So thankfully, you and your husband probably had a cash reserve, and you didn't have to panic and pull it out of somewhere else. So having that cash reserve can be boring when things are going good, and man, you're glad you had it when things go south, or in an instance like you just referenced.
Yeah, for sure. And so that's the key. Also, I know you guys effectively help your clients manage their risk. Talk about some of the risk management tools that you can use to help folks be prepared for the unexpected.
Well, we spend a lot of time just helping define risk, because when you ask people, how much risk do you feel comfortable taking? Everyone would say, most people say, well, I know I need to take some risk to grow my money, but what does that really mean? It means something different to one person than the other person you ask. So we have tools that are able to actually define and apply a score from 1 to 100 on what their risk is. And then we're able to design a portfolio using the same methodology that aligns to that score, so there's not a disconnect between the growth they need, what they're comfortable with emotionally, and what their portfolio is doing.
Well, and I think, again, knowing where you stand is so important. And to your point, a lot of folks don't understand how much risk they're taking. A lot of folks are invested like they're still 20 or 30 years old, but now they're entering retirement. That's a disconnect, right? And I mean, you see that when folks come in and meet with you.
All the time, and they don't know what they don't know. Their job is just, we do this every day. Sean says we're full-time, they're part-time with that. They're just saving their money. As you said, Kristen, they might have had the same investments in their portfolio for 30 years, and their risk tolerance has changed dramatically, and they're taking too much risk. I used to love roller coasters. I'm 45 now. They give me motion sickness, so I don't like them. But ultimately, we're trying to, it's like the 2 R words. We want our portfolio to be resilient, so we're not being reactive. And in these instances, maybe you don't know where your portfolio is. Maybe you don't know how much risk you're taking. Are you taking too much? Are you not taking enough? Or you don't even know how to ask that question. You can call the number below. Set up a time for a conversation. We'll do what we call our complimentary financial compass review. We can talk about these black swan events, your portfolio. We can talk about taxes. We can talk about income. We can talk about inflation, all of that stuff that keeps people up at night. That's what we can talk about. Maybe one of those is your concern. Maybe all of them is. But again, it starts with a conversation. We talk to you. We have many years of experience to walk. We've seen most of these scenarios, so we can hopefully shed some light on what it means for you. And maybe the big takeaway, Kristen, is sometimes it just makes these situations easier when you have someone walking with you that's walked it before with other people.
Absolutely, and you have helped hundreds of people navigate through this successfully. So if this is resonating with you at all, maybe you have some of these questions. Maybe you're sitting there going, you know what? I would really like my portfolio to be resilient and not reactive. The good news is you're not alone. The team of Bulman Wealth Group is here to help and serve you, and it starts by you receiving your very own complimentary financial compass review. That number to call to schedule yours is 888-970-4685. Or again, if you'd rather connect online, simply scan that QR code and that will get you connected as well. When we come back, we're going to discuss how do you manage your emotions during these unexpected times of crisis. You're going to want to stay with us to hear what Scott and Sean have to say about strategies to protect yourself emotionally from these things right after this.
I became a financial advisor coming out of the tough times of the tech bubble in the late 90s, early 2000s. Moved to California, uprooted my life, changed everything, and then 9/11 happened the first week in this industry. I was prepared already to help people from tough times coming out of the tech bubble, but what we didn't expect is there were 3 years in a row when I started of the market dropping. That really impacted my whole career. It crafted and created how we manage money. We don't want our clients to ever lose like that. And so everything we do is built on protection. The goal of our practice and the people that we meet with is to remove the fear and uncertainty that we all face. And it goes back to those first years in the market.
I was a sportscaster on television. I grew up in Flint, Michigan. In TV, you bounce around, and went to Mississippi and worked at the NBC station there and covered, college football's big, NFL's big, all that stuff. And a guy I knew relatively well in a different state decided to get out of TV, and in this opportunity, I always enjoyed finance and money, and it seemed really exciting. I like to communicate to folks and feel like I can communicate well. It was such a fresh, kind of different career than what I was used to that it was exciting.
We go into every meeting with no place to get. We're there to meet with you, to discover your needs, find out where you are at that point, and how we can help you build and craft that plan for the future.
Welcome back. You're watching Your Financial Compass, where today Scott, Sean, and I are discussing how to prepare and protect yourself. I tried to merge those two words together there. When the unexpected happens with your investments. And what we want to talk about now is protecting yourself and managing your emotions so that you can make smart financial decisions during times of crisis. I know this is something that, as financial advisors, you all do so much more than just the investment management. You are often that behavioral coach, if you will. There's a lot of behaviors that come with managing money. You're able to help separate the emotion from it to help your clients navigate through these times of crisis successfully. So what's at the top of the list when you think about what goes into managing someone's emotions?
Yeah, one of them is just kind of instructing them why panicking and selling all your positions and getting out of the market, or say moving into cash, why it doesn't work. I always say multi-level marketing doesn't work, and neither does timing the market. Because very rarely do we get it right. That, as you said earlier, then we have to make two perfect decisions. Are we going to get out at the right time? Are we going to get back in at the right time? So we're going to miss the losses, but get back in and get all the gains. No, you're not. And how can you? Maybe, as I said, a dead cuckoo clock's right twice a day. It can happen, but it's trying to instruct people why that doesn't work and walking them through that. And as I said in the last break, sometimes you want someone that's not your wife or not your husband or not your best friend or not the guy in accounting that you saw at the water cooler explaining what they did right or wrong. It's like, no, you need someone who does this day in, day
Who can be
out.
objective and independent,
Correct.
right? Yeah.
That's exactly it.
Yeah, for sure. So being that outside voice of reason when things are looking crazy, especially since you've navigated through these scenarios before with others, right?
I mean, there's a whole field of study now called behavioral finance, and it's kind of a combination of psychology with the world of finance. And we find that people are just as influenced, if not more, by their emotions and psychology than by the numbers. I think we all know that in so many areas of our life. One example is, even after the market recovers, there's a tendency for people to hold on to the investments that are not performing. There's this idea that I gotta wait until it gets back to where it was before I can sell it. And that's not the best decision. It's a logical, emotional decision, but it's not the best financial decision to make. One of the things that I think anybody who's working with a financial advisor, and certainly is what we strive to do, is one, we know a black swan event's gonna happen. Right? We all do. Yep. So what's the plan?
Right.
I mean, you really need to have the plan. You need to talk through the what ifs now.
Yes. And
it really needs to be an important component of your financial plan. So I would say, if you're not talking to your financial advisor now about what happens when we have the next big event, what are we going to do? Let's talk through it now so we're ready and we're making the best decisions.
Yes, and I was thinking, Sean, as you were talking, your military background definitely comes into play. You need to be prepared when you're in the military, right? How has that served you well as you develop financial plans for your clients?
Well, we always say risk management is one of the most important things we do. We want to make our clients money. We want to grow their portfolio, but you can't do it recklessly. Just as in the military, you can't avoid, managing risk is one of the most important things you do.
Yeah.
Protecting your soldiers, protecting your money,
Yes.
protecting our clients' money is one of the most important things we do. So we spend just as much time, if not more, identifying potential risks out there to a client's financial plan and to prepare proactively for that.
Yeah, for sure. Well, I know that we can sit here at this desk and it's factual that the market has always come back, right? That over the long term, it has never lost money. However, that is not always comforting, especially when someone's nearing retirement, entering retirement. Now you're on a fixed income. And yet the response that a lot of financial advisors give is, you're going to be fine. Don't worry about it. You have enough in there. You're going to be fine. If someone's watching right now and that's the response they're getting and they're sick and tired of hearing that and not having a solid plan, what would be your best encouragement to them?
Well, one of them is call the number below. Not to be too much of a hard sell, but call the number below, because we've seen it. And no one, I don't want to hear that. If I was working with an advisor and they kept telling me that, that ain't the right answer. I'm sorry. So it's like, okay, explain why. Like, why should we make some change? Why shouldn't we make changes? Or, and here's the thing, sometimes we jump this dramatic example of sell all in the cash. Maybe when things are down, it might warrant, hey, maybe it's time to rebalance things. Maybe we have too much in aggressive things and we can scale it back. Maybe, as we said, our portfolio is too aggressive, we scale it back. Or is this an opportunity? Maybe we got a few years before retirement, we got some extra cash laying around. The market is going to come back, as you said. Maybe that's the time to invest some money. But you've got to give some actual meat to the in my opinion, the meat to the reason. Well, it's going to come back. Well, it is going to come back. But what can we do now without panicking? What can we do now to take advantage of this? What can we do now to still sleep at night? And if these are questions you have, if your advisor keeps telling you the same old crap, pardon my French,
it's time for a second opinion.
Time for a second opinion. I lost my own train of thought, so I'm going to unplug my microphone now.
No, go ahead, John.
Well, there can be a silver lining. I mean, you talked about the rebalancing, but another one is taking advantage of Roth conversions, having talk about it now, have a plan in place. When the market does go down, that's a good time to start doing some of those Roth conversions. So there's some very tactical, positive things we can do during a market downturn.
Absolutely. So what could be right for you? Well, the best way to find out is by getting that second opinion, complimentary from the team of Bulman Wealth Group. You can claim your complimentary financial compass review by calling 888-970-4685. Thanks so much for being here, and we look forward to being back with you next time here on Your Financial Compass.